Hi, everyone, and welcome to the COVID-19 Effect on Supply Chain Ask Me Anything. My name is Linda, and I'm a Customer Success Manager at Zeneta. Today, I'm joined by Patrick, our CEO and co-founder, and Anastasia, our Director of Product here at Zeneta. We received many questions from you, so thank you very much. If you have any questions during the panel, feel free to use the panel function and submit your questions. Yeah, we're going to get started now for the next hour, and I'll pass the mic to Anastasia.
Thank you, Linda. And yes, welcome everybody to the webinar. We're very excited to talk in the next hour about the impact of the coronavirus as a kind of extended event of the Chinese New Year and what it does to capacity and equipment. And let's have a look at the first question that we have received of one of our shippers customers. So the question is, what do we expect the coming month on the Europe-Asia trade? And what is the outlook of empty container availability on both places? So Patrick, we have seen severe capacity reduction, cargo stranding in various Chinese ports, cargo transshipped to other ports. How do you see the situation at the moment for that specific trade and the availability of empty containers?
Yeah, I mean, first, let me start by saying the entire market seems to be in complete flux, and I think when we briefly discussed this earlier today, Nastya, I think you mentioned some statistics that there was about 47% more empty, containers available in Shanghai than it was in the same week of last year, and then 33% less container availability on European side in Hamburg. So that sort of gives you a very substantial number on how skewed the balance is now. And I guess when we're asked here about our expectations for the coming months, I think we're looking at the market on a daily, hourly basis, and we're not seeing a lot of good news coming in at all. I mean, there's rumors that now production is back up, picking up about 60%, I think, in China. Whether that is true remains to be seen, but we're talking about a substantial imbalance already created and enormous amounts of capacity pulled out from the market from the carrier side. As much as 77 void the cancelled sailings. Is that correct, Nastya?
Yeah, that is correct, and that comes on top of the over 100 services that have been blacked for the Chinese New Year's period. So a massive reduction in capacity at the moment. Yeah, so coming back to a little bit the equipment side, because we see a lot of questions coming in with concerns about the equipment. I mean, space is one thing, equipment is the other thing, because if you don't have an empty box to fill your cargo in, then it's almost irrelevant if there's space on the ship. So how do you see, and that's another question coming in from one of our shipper customers, how do you see the equipment situation in the US at the moment? Is this similar, comparable to what we see in Europe at the moment, or is it any differently?
Yeah, that's what we're getting reports on, right? That it's similar situations, shortage all over, whether it's dry boxes or reefer boxes. We have reports coming in saying that it's not even possible to ship reefer boxes over because there's no plugs available. We have reports in saying that ports are completely congested, boxes are not being picked up by the carriers even, and as you can see, a few end of February, the first carrier came out with a force majeure notification with the CMA CGM that was also described in media with the load start this week, I think. And in short, there's this feeling that we haven't necessarily seen the worst yet, right? So people are asking, when will this be over? It's impossible to predict, but I think there's some level of consensus that the situation is still sort of escalating, with the biggest concern being that if Europe or US decides to shut down to some degree, it doesn't matter if the Asian side sort of picks up again, because if the buyers are closing down, then this situation will not only continue but very much potentially worsen. And I think this has been also part of our discussion. Is like, how do you plan for this? What do you do? What sort of contingency plans can you have in place in a situation like this? And what are the options that the different shippers have? And most of them don't have alternatives these days. So often they have like preferred suppliers sitting in Far East, whether it's one or two in China or even another one in Vietnam or nearby countries. They all struggle because their sub-suppliers won't necessarily provide them with the raw materials or the parts that they would need in order to ship the finished product or semi-finished product over to overseas, right? So this is, I guess, part of the conundrum here, right? That if you were to have alternatives, you would need alternatives these days in South America, US, Europe to deliver, right? And most companies don't have that because of the history of a lot of the cargo coming from Asia, right?
Yeah.
And I think that would be also one of the learnings coming from this incident, or that companies will look more broadly to have alternatives within different continents, because things like this might just happen, or most likely will happen again several times. So re-looking at their contingency plans and seeing if there's alternative supply chains they can have coming from other continents completely. So that's going to be interesting to see as we get off of this. But that's a little bit further off to the question in terms of the equipment imbalance. But I guess we have concerns that there's no immediate improvements of the situation. On the contrary, we're worried that it's going to be even tighter if Europe or US decides to close down more than what we've seen so far. I think in Italy, we have now reports that some schools and universities have shut down as well, right?
Yes, unfortunately, yes. So it doesn't really help the whole situation. But yeah, maybe a little bit looking back into the equipment situation and the specific question that we got in regards to the US, we might want to add some information for our customers that there are detention penalties coming in, as we see in the terminals in Los Angeles and Long Beach. Some carriers are waiving those penalties, but some don't. And what we more interestingly see is that if you actually be able to issue an appointment to return your empty container to the terminal, it is asked to bring a full container back. So we have a dual transaction at those two ports at the moment, which in the light of another question that we had here coming in from a large shipper in the US, asking what efforts can be taken to help mitigate cost impacts directly tied to the to this situation. I think it's very important for everybody to think about how to handle these situations directly at the port, because apart from the equipment situation, so close to no empty containers available at those ports in the US and Europe. Even if you have equipment, then there might be a likelihood that you can't place it at the port because the ports get congested with full containers sitting there and waiting to be picked up. And it's not going to happen because, or it's happening in a reduced manner because of the slashed sailings, right?
Yeah.
So I just wanted to point to that fact, because it's quite severe to see these things happening in the West Coast US. Heavy impact for the shippers on that side.
Yeah, and a lot of the conversations we've been having with our customers as well has been around, like, is there any chance to avoid these increased costs that we're facing? And more of our customers are getting so pushed or stretched that there's this increased feeling that it's just going to be a pay-to-play situation, right? So look at the cost increases now that we have on the backhaul from Europe to Asia, with the market literally exploding going into March. Substantial cost increases on the short-term market. So if you sit well below on a traditional, let's say, export contract at the low hundreds even to bring your cargo to Asia, you would even immediately see that risk, with the carriers now facing billions of dollars of loss. Will they be willing to pick up a $200, $300 box if they can get the 800 on the short-term market with the equipment availability and all? And I believe that's going to be the consequence if this picks up a little bit and softens and we normalize a bit more. They will start cherry picking the boxes that yields the most for them, and this is what our customer base in particular must be on the lookout for, right? They need to understand what is the pay to play price basically in the market, and not necessarily your long-term contract anymore.
Yeah, maybe in that connection, we can pick one of the next questions we got in from one of our European shippers. That is, any way to give immediate rate increases for understanding impact by lane? Yeah, Patrick, how do you see that?
To avoid sort of going into each specific trade, as you can do that in the platform itself as well, what I would say is that on overall and in general, we see hardly any trades holding up, right? It's all the traditional ones, all the big trades, the Asia Europe, Asia US, transatlantic, north south, all of them. We had these great expectations for IMO 2020, even though we as a business said supply and demand will determine what kind of cost increases that will be pushed through in the market. None of us expected what we're currently facing, but this market has no fundament to push through cost increases besides on the backhaul trade, which is everything is like reversed, right? So you have the front haul trades that we would expect to see cost uptake or rate uptakes on the back of IMO 2020, right? Depending if they could match supply with demand. Then we would expect to see that. That has not gone through. We see rate levels at low 2019 levels on those, right? So there's absolutely no IMO 2020 effect in the market. So who's eating that cost? Well, carriers, but then again, carriers are blanking sailings because there's no cargo to be moved, which creates this incredible situation where the backhaul explodes. So everything, this is what I mean with everything is upside down, but there's still in theory trade imbalance. This is what's weird with this situation, because there's not a lack of demand. It's just the market situation that prohibits everybody from moving, right? And so in general, in terms of commenting on the market, weak markets from a carrier point of view, good buying markets from a shipper point of view, but you can't get product moved necessarily, right? But then on the traditional corridors back to Asia, backhaul, that's supposed to be cheap trade lanes, they're now getting expensive because of the imbalance. There's still European and American exporters that wants to move out product, but they're struggling, and if they get any equipment and there's a vessel picking up the box, then it's at a premium price.
Yeah, and I think this is specifically interesting also in the light of one other question asking, are PSS surcharges acceptable when shipping lines can put in more capacity at any time? So what we've seen in 2017 on the European to Asian trade, like rates were doubling, and the likelihood of this happening for a similar event on the Far East eastbound trade lane at the moment is obviously quite high. So it's it is a relevant question if these surcharges can be really accepted once we see production in China picking up again and carriers gradually introducing services back into place. How does that justify this kind of price situation? Because also considering the fact that carriers, of course, need to use some of this capacity to bring back empty equipment to Asia, right?
Yeah, and personally, I've always cared a little less about what you coin the different cost or surcharges, whether it's even a piracy surcharge. I think I wholeheartedly, fully believe that it's only a consequence of the supply-demand balance, right? And this is what the carriers try to control now. They try to trim down capacity to match the demand side, right? And this is also should give us all a strong sort of indication that we should be worried, because somewhere between 50 to 70% of all outbound capacity from Far East or China is extracted from the market, and that comes with severe consequences. This is the sort of the first indications that global trade is completely coming to a halt, and we're expecting a slight uptake on that with Chinese factories coming back into play, but the market needs to stabilize with all this equipment that needs to shift and be moved around before we see anything that's normal. And in the interim, we're holding our breath and waiting to see what happens in Europe and in the US with the virus, right? So to me, peak season surcharge, whatever it is, it's just a different name for whether it's a market that allows them to charge more.
Yeah, I absolutely agree. And I mean, it is also important to mention that the actual effect of these equipment shortages will most likely only to be seen in the next few weeks in Europe and the US, right? Because now that the services have gradually being pushed out, it takes some time until the loop has closed, right? So yeah, let's see what we have next in the list in terms of questions from our customers. When do you think markets will be fully recovered from the coronavirus effect? I think, yeah, that is a good question that obviously everybody wants to know that. And I think at this point in time, it's really hard to make any estimations for a full recovery in the markets, because we seem to be just at the beginning or at the peak of what is happening in terms of how much the virus has spread so far, right? So it's beginning to affect Europe. We're seeing more and more virus news from North America, specifically in the US. So I'm not sure about the question of a full recovery when we even have no picture about the full effect of the virus spreading around the world.
Yeah,
what is your view on that?
This is the $1 million question that most have, right? And I think we need to approach it from a different angle. We need to look at it as we don't know. Most likely it could be long, and we need to plan for it to be even longer than that. And that's, I think, what is the responsibility of businesses and those working within supply chain, that you need to have plans for this to drag over summer into the new year and so forth, because for now that's what we're looking at. Nobody knows anything else, right? And it's all sort of statistics shows that it's still sort of escalating rather than flattening. It's only, I think, in China that they for now can have some qualified opinion that they're getting a little bit of flatter curve on the amount of people getting infected, right? So I think from a supply chain being so, especially within container shipping being so international and global in its nature, I think everybody should look long term and then evaluate their options based on that.
Yeah, long term is maybe a good point, because of course people are asking themselves, so negotiations have started for the long-term contracts on the Far East westbound, and Trans-Pacific negotiation season is coming up. So I mean, to me, I would clearly have an issue now going into a long-term contract negotiation in the light of what's happening right now, because you can't simply really know how the virus will affect the long-term rates, right? What would you recommend starting to go into long-term negotiations at this point, Patrick, or would you rather say, okay, let's wait for another couple of weeks?
Yeah, that's an interesting question. So the way I look at that is that in times of increased uncertainty, making sure you have flexibility, I think, is of high value and of high importance. So there's like this opportunistic scenario now where you would lock down a favorable long-term contract, but the increased risk that you're exposing yourself to is substantial. If the market recovers, you might sit too low in the market anyhow, so you're not going to get shipped because they're looking to recover some of their losses on the carrier side. And then secondly, which, I mean, if you do the math, that consequence is substantially more than a few $100s saved on a container rate, right? So from that point of view, I think that's
estimates go into 2 billion, right? Losses
yeah.
over the past weeks already. So
yeah, but I'm already thinking from a shipper point of view. So let's say you could be opportunistic and contract low, and then the market normalizes and you have substantially higher rates, and then that's what the carriers would look to recoup, as you mentioned, right, on these losses. And then the attractiveness to pick up other companies or other shippers' boxes is so high that they're forced to do it from a financial point of view. So from a supply chain stability point of view, I would say that comes with a high risk to contract now long term. I think that with all of this uncertainty in the market, I would definitely opt for shorter contract period, and that might not be moving into the spot market or anything like that, but quarterly ones. Like, make sure you at least have the flexibility to be in the market every quarter. And even I mean, if you say that the market continues to drop further down, you strike a long-term rate now, and you see the market continue to come down, you might lose out, right? So you also have that risk, because if we go back to Jan, Feb, March 16 and onwards, you had average of the market on the short term sitting at $150. So we've seen far worse, but a few months later we saw also Hanjin going belly up, and this is one of the things that I think that is so recent history that most shippers still feel the pain as they think back to the situation we had in 2016. And it's a little bit like it's in everybody's self-interest to make sure the liners stays afloat, right? So if you're considering a long-term contract now, even committing yourself to a carrier that might be in financial distress comes with a risk. So I have very few sort of recommendations or arguments for closing very long-term contracts now. It does not make sense to me because it comes with too much risk.
Yeah, I think you covered the concerns that many have at the moment, also considering the fact that carriers losing a lot of money again. And as said, the Hanjin bankruptcy is not too far away back in history, and people start thinking about contingency plans and how to overcome the stress that you get when your supply chain is interrupted, right? But the situation, of course, at the moment is a little bit different, as you said, in terms of the demand side in general. Maybe let's look at the next question that we had in coming in up front our webinar. So, how long can carriers hold on their strategy of blank sailings while equipment imbalance is increasing and demand in Europe is still there?
Yeah, it's from a carrier point of view, right? It's almost a strange situation to be in from a shipper point of view, first and foremost, right? Because you know that the demand is there, you want to move the product, you want to keep business going, But a vessel that goes in a loop, let's say Asia, Europe, and back, it's stuck because the ports are congested, right? So it's not only about one. It needs to be both sides functioning of the continents, right, in order to make this flow not seamless, but because it's imbalanced, but in order to have it operating, right? And this is where I think it's very difficult for the carriers now, because it's not possible to offload reefer boxes, for instance. So even though you have European exporters filling them and want to ship them off, they can't even pick them up, right?
Yeah, that's true. And yeah,
Go.
please go ahead.
No, go for it.
No, it's a very interesting point that you just brought up with the demand side in Europe as well as in the US, because we also read about the recent opinion from the Purchasing Managers Index, which is at a 16-year history low, falling from 51.1 points to 40.3 points. And the reports say that anything below the 50.0 indicates contraction. So you already have mentioned that there is a certain concern over industries or economics in the Western Hemisphere going into a recession kind of scenario, which would make the whole situation for the carriers even worse, right? Because if the demand side in Europe is not there, then there's even no need for the manufacturers in China to increase production, right? So
yeah, it's definitely like I look at supply chain, transportation, even procurement as like early indicators, right? And this is what we that number indicates as well. And that's why we're saying, like, okay, let's hold our breath for a while now, but let's see how things develop in Europe and US. And if it goes as it's done in Asia, then the R word definitely needs to be entertained. And we're definitely concerned that this is what sends the world into a recession, and that's going to hurt more for the carriers. They will be nimble and as nimble as they can in order to move supply anywhere where they can have demand and movements, right? But now it's like a locked situation a bit, right? But it can slowly loosen up if production continues to pick up in China and Asia, because you also have these transshipment ports that are congested, right? And there's reports from Taiwan and other countries around that is equally chaotic as it is in China. So, but if that softens and we don't see the let's say similar closing in Europe as we've seen in US, then for sure the situation might improve substantially, and we might just come out of this with a huge blow to the, let's say, overall 2020 value production that the world should have produced, right? But there's no signals indicating that. Yeah, it's on the contrary. There's clear noise in Europe and US that is increasing, not decreasing.
yeah, okay. So maybe we could have again a look back into the long-term rates. There was one question that said, how are market rates for long-term rates? When does it make sense to conclude long-term rates for a period of 1 year?
Yeah, it's a little bit in the same direction as we already covered. I would say I would be extremely cautious to do that. There is an opportunistic opportunity now, and might be also for the next few months to come, that you can secure very favorable rates. But at the end of the day, given the current climate and everything we discussed, is that going to be a real rate, right? And that also leaves you with alternatives. What potentially can be mechanisms that you can include into the contract negotiations that allows you to review these rates, right? And that might just be in the interest of the shippers and the carrier, right?
Yeah, I mean, in the past, things like index-linked contracts were coming up to discussion in this regard, and I've seen that myself in the past, being a quite reasonable mechanism to mitigate such a risk. However, of course, everybody is always a little bit worried about the very peaks and very lows in the short-term market. So
Yeah,
one has
and I
to
mean,
consider this very carefully, right?
absolutely. And our data is perfect to fuel those kind of conversation. And in the interest of both parties, or all three parties for that matter, if you have a forwarder or NVOCC in the mix there. Absolutely.
Yeah. Okay, looking at the next question that we have, what will be the trend in rate levels for the next 2 to 3 months between Europe and Asia? I think partially we have touched this already, depending a little bit on how much capacity is coming back in the next coming weeks. As said, we would potentially see a sharp peak in the rates if we're seeing the productions coming back from China. But beyond that, like a scope of 2 to 3 months, Patrick, how do you see that coming in, also in the light of everything that is in preparation for peak season later in September, August this year?
Yeah, and it's easy, right? Everything, like if you look at Europe to Asia, it's what has happened is just incredibly tight, right? It's impossible to get things shipped. What happens is that prices spikes, right? And and that's what we can see now. And I would say that the only there's nobody can predict the next 2-3 months, right? If this continues, we'll see continued rate level, continuously increasing rate levels. But at some point, the official government officials is going to look at the situation and they're going to say, okay, what's the statistics here? What's the death ratio that we know? What are the facts that we have relative to other diseases like the flu, right? And then they're going to look at the cost of the decisions that has been made so far, and we see this already being addressed. I mean, Sweden is looking now into ways of how they can cut workforce more swiftly or reduce work hours so that businesses stays afloat. You can see China has issued these notes that calls for force majeure in order to protect their businesses, right? This is what I would say, that when you extrapolate this into the market and the rate levels going out of Europe or into Europe, is all dependent on how governments close down or open up again. Because it's not that, like, as you said, Nastya, and that the financial crisis, that the demand was not there anymore, everything collapsed, right? We still have that in principle, but it's artificially closed down. If that open up, and if that decision is so expensive for government officials, and this is what I'm thinking about, like, if that is so expensive and they can't find the data, the facts, the statistics to back up those decisions, then they might loosen up again, right? And allow things to normalize, meaning there might be a situation where we're just asked to live with COVID-19 without any vaccines or anything, but the consequences that we're creating now on the decisions we make are so severe, and so many people are in line of losing their jobs and so forth, that they have to let go again.
Yeah, it's interesting because we can see that by the day what it means when a government shuts down certain areas that are important for certain economies, like we've seen the trucker situation, for example, in China, right? If we look at, for example, the situation in Ningbo, where we have 24,000 registered truckers. 95% of those people, they don't come from Ningbo itself, but somewhere in the area of Ningbo, partially driving hours and hours to work every day. Only 800 of those 24,000 truckers were working on February 12th, right? And up to today, only 7,000 of those truckers have been brought back to work. And that is despite the fact that the government has said, okay, the 14 days quarantine has ended and you can go back to work. People have to have been kind of brought back to work by buses and yeah. So even if a situation like a quarantine situation is released, and governments try to get everything back to run the business, it doesn't mean it's there from day 1 to day 2, right?
No, and then the numbers you're outlining is 1/3 is back, right? So if you think about these congested ports, if you think about the equipment imbalance that is created, it will take a long time. Even one sort of voyage is about 40 days, right? So just to start normalizing the situation, and that's why I say, like, almost regardless of how the virus situation develops, the situation we've created now will take months to recoup from. Hence, you need to put yourself in a position with flexibility to just see how the situation develops day by day.
Yeah. All right. Shall we have a look at one of the fresh questions that we just got in? Let's have a look at maybe one thing that we should also put into light with the IMO 2020, how the market have reacted to IMO 2020 and coronavirus.
Yeah.
So maybe that is a question that is more related to the fact that we saw quite an increase in rates due to the introduction of the IMO 2020 surcharges, which have gradually vanished over January, and now seeing rates sliding down due to the effects of coronavirus.
Yeah, I mean, let's be a bit specific here. If you look at Asia Europe to begin with, let's take that one first. In Q4 we had this step up of the market, right? Where I think it was November, December, and into January, the rates increased, right, in this stepwise manner, and all of that is gone already. So it's almost like stepping up, going up the stairs and then taking the elevator down. It's gone.
But is it really gone for all the trade lanes? Is it?
No, that's
is
what
that
I'm saying.
what you see?
So that's Asia Europe, right? And we're looking at shorter market here now because that's the ones that moves the fastest, right? The new long-term contracts we've seen coming in this year on that trade is substantially down. They're down on average, right? The newest contracts are down. So the whole IMO 2020 on that trade is non-existent. Non-existent. There's rate levels we see that are on par or below 2019 and 2018 levels where there was no IMO 2020. Okay, then you go to Trans-Pacific, where we never saw that uptake, just the moving market around sort of the same level going into 2020. So we anticipated or waited a little bit, held our breath to see what will happen as we go into Q2 when the contract sort of season is full on that corridor. Well, that whole contract negotiation period is in complete flux, right? The TPM was even cancelled. Companies are running their RFQs and they're looking to settle their rates. We know that. We know that it's ongoing conversations, but we questioned what the value of the rates will be eventually, right? And that's where we urge our customers to be cautious about going into a 12-month fixed contract now. And this is mutually should be of mutual interest, because the risk that you get exposed to, that we talked about earlier already today, so I won't go back into that, is of severe importance to any importer or exporter, and that's what they need to stay on top of and understand and control, so that they avoid further disruptions to their supply chains, assuming the situation calms down, right? Which again is something we already debated today. So yeah, I think that's some of my thoughts. Anything to add to that, Nastya?
No, I think it's you covered mainly the most important aspects, and it's kind of it's funny to see when we remember back the discussions that were going on throughout 2019 about the effects and what potentially can happen to the rates with the introduction of the IMO 2020 surcharges. It's almost funny, if not sad, to see what happened in the meantime. And I'm not sure if the coronavirus really is something that blurs the picture now, and we would have seen something else if it wasn't there. But it's really kind of also a little bit scary that so many people in the industry are talking almost a full year about an event that's going to happen, and then it doesn't materialize, right?
But
Why
we
that
showed
is
this.
very interesting to see, and why that is.
We showed this in our summit as well, Nastya, that there's historically a wide range of events that has occurred in this industry, whether it's fuel regulations or whatever it is, and you can't correlate them with the rate, with the cost that we see. That's not how this industry works. It's supply and demand driven, and I think this situation with COVID-19 is perfect. It 100% confirms that it's supply and demand driven. Doesn't matter what IMO 2020 says. This is how the market looks like at present. And just look at the backhaul. Look at the backhaul. That's a supply and demand effect, right? Because there's still demand to push out the boxes, which allows the prices to spike.
Yeah.
Right? And I think, go.
Please go ahead. What do you think?
Yeah, I just think this is all what makes this industry so immensely interesting. It's constant movements and vibration, and it's like you get to feel the pulse of the world economy early on. I've friends that are weeks behind in their sort of understanding of what's going on in the world, simply because we're at the forefront of things when it comes to this industry. Transportation is like an early indicator, right?
Absolutely. Yeah. That's also why I love it. Can't live without it. Kind of. A very interesting question coming in online. Any information of alternatives on the backhaul, train capacity? Is intra-provincial transport allowed or eased up yet? I think that is very interesting. I mean, one has to understand, of course, the backhaul lanes are very much driven by low-paying commodities, right? So we're not talking about semi-finished goods that needs to be placed into our iPhones or whatever consumer goods that needs to be moved fast. So from my perspective, the need of an alternative for the backhauls is not as urgent as on the head hauls. Nevertheless, of course, people might need to move things quicker than they move right now. Looking, for example, what we haven't touched yet, the alternative of doing an air freight move is also a very, very I would say tricky situation at the moment, because not only the cargo freighters have cut capacity almost in the same manner as we see it in the ocean freight, but also the alternative of loading something into the belly of a passenger airplane is not really an option, because they're cut as well. Right, so train capacity, yes, okay, there is some block trains running between Europe and China via Siberia. If that really is an alternative, in the light of that we might need another 2 to 3 weeks to see really if the capacity is gradually coming back, I'm not sure. How do you see that?
I'm not sure either, to be honest. And I think I was wondering, I was sitting here and thinking while you read the question, is like, is there alternatives to also, you know, move on train and come up with other sort of transportation modes to get the cargo there? But I think I think that that sort of route has been strained for years anyhow in terms of capacity. But I think you're raising the key point anyhow. It's the head haul that needs to be fixed in order for the rest to sort of fall in place, and that's the biggest point here, and that's what I would keep on monitoring for now at least. We also got slightly related to what we discussed, a question on how much of this shortfall we believe will be catched up again when there is more clarity on Corona. So I thought that would also be something we should cover, and I actually look at it as value creation being gone for this year, and so far we're talking about 1 to 2 months, right? And we're on the 3rd month, and I don't believe it's going to be possible to catch up. I believe it's going to be months still that is going to before anything can stabilize and normalize, months at best.
Yeah.
And this will be lost from the value that the world was supposed to produce in 2020. And I believe that will come with consequences for most businesses.
Yeah, I believe so too, and it's interesting to see if you look into the retailer business. Maybe here in Europe, we got information that retailers are telling us that they have stocked up. Of course, they did before Chinese New Year, and most of them tell us that those stocks will last for the next, let's say, 2 weeks. The fears are only for like what's happening if we move into a situation that goes beyond a scope of let's say the next 2 or 3 weeks, right? So also in coming back to the question of backhaul and head haul transportation, I also think it's exactly what you just said. The main thing is looking at the head haul. If this comes back, then we're going to solve a lot of other problems, right? Now,
yeah,
okay, we yeah,
it's like the engine there, right? The main engine sits Far East and pumping out the products and the material and the raw material that everybody else needs, right? So and I also think this has been extra bad for reefers, and I'm not sure whether we covered that already, but we have reports saying that there's no more plugs available, so you can't move them at all. And this is something also that is risk if you get your hands on reefer boxes and load them with cargo. If there's no plugs, it would destroy the products, right? So there's sensitive products that could be at risk as well. And even worst case, we can imagine situations where if we go back to 16 again, if some Hanjin situation happens and we have all ports congested, I'm not sure how all of that would play out as well. But I think we're looking at a market now. You go.
Yeah, the reefer thing is very, very scary, to be honest, because I mean you've mentioned that there is a plug shortage. That's true. But what happens to reefer container with products that only last, let's say, for a week or 2 in that container? Yeah. Then the plug doesn't help any longer, right? Then the products will be gone. So coming back to the whole scenario of how much value did we actually kind of lose over the period of the past 5 weeks with a shortfall of around 2 million containers, how much more value will be actually destroyed by the fact that we're losing products in those containers. And then those containers that are trying to get into those ports being transshipped to somewhere else, that might doesn't help as well, right? Because then the lifetime of the product that is sitting in the box might be over before it reaches the actual transshipment port to the endpoint, right? Yeah. So it's a massive impact, and we've seen we've heard about prices for reefer boxes now skyrocketing up to beyond 5,500 US dollar per box, which is really, really, it's a crazy rate, I would say.
Yeah, but it's almost like I feel some of the hope for the carriers sits within a recovery of the market. So you get that like V-shaped rebound, right? But I mean, there's a lot of overlapping questions about the market, IMO 2020, and the virus and so forth, and there's a lot of these we've covered, but there's nuances to them, and one of our customers is asking whether all rates are going up, and we want to be clear on that. That's not the case at all. As the market situation is per today, most rates are coming down besides the backhaul, right? And this is the reversed sort of market condition, right? The backhaul has been moving up, and the front haul, which is just trending straight downwards. And I believe as long as this situation continues, the front haul for sure will continue that development. And then if the market recovers, we will see a nice or aggressive uptake, nice in terms of the carriers, and in the long run, it's in everybody's interest that the carrier stays afloat. All other alternatives are very disruptive and negative for global trade, and not to think about how few carriers we already have are left with. There's 3 alliances, right, and only what is it, less than 10 carriers doing 90+% of global trade. So I cross my fingers, but it does look gloomy for some carriers in particular that is heavy on depth, on the depth side. And I believe this is what our customers should stay focused on and cautious about, both when it comes to contract and when it comes to bookings.
Yeah, Patrick, Nastya, just to let you know, you have around 8 minutes if you have anything else you want to prioritize.
All right.
I think there's one, for me, interesting question that we haven't touched yet. So it goes about the question of how do you foresee organizations shifting their production and sourcing needs in the light of the virus? Who will be the greatest benefactor?
Yeah, that's a great question, and I believe one of the outcomes from this will be increased appetite to look at different regions to source their cargo. And just very holistically, if you're gonna think about anything mitigating situations like this, you would need alternative supply chains originating from different continents. So it's not an option to move from China to Vietnam, right? That doesn't cut it. So that means you got to look Africa, South America, North America, and Europe. Those are the options that you have, right? And then how can businesses plan? How can businesses plan in terms of, okay, I have my preferred and backup suppliers, right? So that you have alternatives. But this is the complexity of running that, and also simulating these. The cost of these supply chains is obviously, of course, where we can chip in and help. But this is what increases the complexity, increases the cost, but then mitigates some of the risk that we're now seeing hitting everybody. The bigger question mark, though, is if this is so widespread that eventually that it hits all continents, then you can have any contingency plan you want, but it won't help anything anyhow.
Yeah, and maybe to add to that, Patrick, I mean, contingency plans are I mean, this is of utmost importance in such a situation. However, some industries might not even be able to quickly move production somewhere, also due to the fact that raw materials are tied to certain areas in the world, right? So even if you have a production site as a garment company sitting in Taiwan, then still your raw materials for that company might need to come from China, right?
Yep.
So in that regard, some of the moves that you would like to see in terms of sourcing might still be tied to certain areas in the world that are stressed with something like we see with the coronavirus at the moment.
Yeah, and if you look at SMB businesses as well, they might not even have the competence, the financial means to do this, and even in a situation like this, they might have cargo value stuck at port that is at risk of tilting the entire business or tipping the entire business over. So yes, there's a million things to consider, and there's individual things specific for each business that they separately need to factor in so it's a very high sort of holistic line of thinking that could be explored.
Yeah.
Cool.
Okay, I mean, we have a lot more questions. I think in the broad perspective, we have tried to answer all of the incoming questions. Some have overlapping topics, but I think most of it we have covered. Unless you see anything else, Patrick?
No, I think it's a lot of them is around the same sort of topics that we already touched upon. I mean, this is a customer only session, and we remain available for our customers, and I think that is important. So if there's any questions, anything that you feel is unanswered, or anything you want to debate with us, anything you want to chip in, free to reach out. It's a pleasure to help in these times. And I think, Linda, did we plan to announce anything on our portal today, or do we say that for later? You go, Linda.
No, that's it. Thanks, Patrick and Anastasia, and thanks everyone for listening. We're going to send out a recording next week, so you can look at it again. Also, as Patrick already said, always feel free to reach out to us, because we're here. That's what we're here for. We want to talk to you. Yeah, so the other exciting thing is that today or tomorrow we're going to be launching our customer forum. It's a place where you can collaborate, share knowledge and best practices with each other. So it's customers only, and you can support each other with everyday challenges. I'm looking forward to see you on our forum, and thanks for listening. Bye-bye.
Thank you.
Bye.